Hello, good evening. It's Adil here bringing you a review of the European market, specifically the FTSE and obviously European related as well, for the trading session, the 1st of February 2021. Certainly laughing due to the just reminiscing last week's price action and the whole euphoria and reaction to GameStop and obviously the rest of the short squeezed stocks. Okay, so it certainly seems to be Main Street versus Wall Street again. I don't think I really need to go into the antics and really the comedy from last week, but it certainly is funny. Certainly is very, very funny. Okay, so a lot of obviously comments and it's been hilarious. Okay, it's been hilarious. So last week was really good fun. I sort of wrapped up early in the morning on Friday and just enjoyed the commentary that was coming out of both sides, whether it be Wall Street or Main Street. Obviously, the main concern and the worry is the fact that obviously they are stopping individuals from trading now, and it certainly seems like the regulators, Wall Street, obviously are getting their own back at the moment. But again, there's a lot of it's a deep divide. Obviously, contrasting opinions on both sides. But it certainly seems like I think the summation really is Main Street is fighting back. Whether you think it's stimulus checks and obviously individuals on furlough trying to take on Wall Street is comical, nevertheless. But again, certainly skewed. Support is certainly skewed towards Main Street, and given the fact that although you can't argue or you can't justify the ignorance from Main Street at the moment, but nevertheless, it certainly does expose the blatant manipulation and obviously. What can we say? Total market control or dominance from Wall Street, and certainly does obviously expose the fact that there is no concept as obviously a free market to a large extent. In reality, as traders, all we're trying to do is basically trade the manipulative wave. That's basically what it boils down to. Okay, I mean you can see from the chart of the S&P 500, and if you look at the chart of Tesla as well. I mean you don't get astronomical moves like this in the middle of a pandemic, and again, obviously it's been gaslighted by the Fed, gaslighted by fiscal and monetary stimulus, which we all know, lack of regulation, Mr. Trump, etc., etc. Okay, so this basically, I can go into it for hours and hours on end. Okay, really, at the end of the day, it all boils down to Main Street versus Wall Street, and Main Street certainly won last week. Now, what are the implications and what are the ramifications in terms of going into this week? As you can already see on the S&P 500, we've had quite a significant sell-off, given the fact that obviously we've broken higher. If you look at the weekly chart here, I know I did mention obviously European markets, but you can't ignore that weekly bearish candle. So given the fact that obviously a lot of individuals are squeezed out of their short positions, which means that obviously they need to raise cash, and therefore obviously they have to sell their heavily leveraged long positions, obviously, and that's exactly what ensued, a weekly bearish candle. Okay, so what are the ramifications in European equities, given the fact that obviously these antics are happening over in the US? Obviously it exposes a lot of risk and over leverage in European markets to a large extent as well. Now FTSE, or should I say European indices, really were dragged down by the fact due to obviously concerns regarding supply of vaccines, the bickering between the UK and Europe as well, and obviously the efficacy of these vaccines, given the fact that there was a negative report AstraZeneca, etc., etc. So again, that certainly has a negative connotations there as well. Okay, so let's just look at the technical picture then. So the FTSE 100 on the daily chart has actually reversed the full move, okay, given the fact that we were expecting a fib 75, 61, 50, 38. All of them failed, okay, all of them failed, and obviously we know why. Obviously a total risk off move, and it's been quite a very impressive reversal, as you can see here as well on the weekly chart. Okay, in terms of the FTSE 100. Now let's see the FTSE 350 and FTSE 250. Let's just see how they're performing. Now the FTSE 250 has performed very well. So if there is a bounce, it's going to be a bounce in the 250 first and foremost, so bear that in mind. There has been talk obviously of them signing a potential free trade deal in Asia, so watch out for a lot of the FTSE 250 indices. A bottoming tail was put in on Friday as well, so indications there, potential rally. But nevertheless, let's see what the fallout was with regards to AMC. Now the FTSE 350 obviously being hammered as well along with the FTSE 100, so again, watch out in terms of the downside movement here. In terms of the weekly chart, watch out for this previous resistance equals support, okay, on the downside in terms of the FTSE 350 daily chart as well, coming into this key zone where previous resistance equals support. If we do continue to flush lower, then there is potential support down here, and obviously the bottoming tail as well. So let's see how that certainly reacts. Daily chart of the FTSE 100, let's give you an insight here. Okay, daily chart again is coming into support, so we are into potential short squeeze territory now. Those that shorted at 6,900 certainly potentially looking at a 500 point sell off here on the FTSE. If obviously the GameStop obviously scenario certainly does continue to unfold, if we see a sell off and the FTSE down to say 6,200, 6,300, that certainly will be an area that I'll potentially be looking to go long. Okay, I'll certainly state that outright. Will be very, very tempting, provided obviously the fundamentals are not too bearish. Bear that in mind. Okay, let's see exactly what unfolds, but nevertheless, this certainly is coming into bullish territory for me. I would certainly exercise any further short positions unless obviously the news is overtly bearish. So it'll be interesting to see how that unfolds. We are seeing a potential short squeeze, an early short squeeze in silver, and potential short squeeze in gold as well, given the risk-off scenario. So let's see how that unfolds. Okay. In terms of the markets themselves. Okay, the FTSE 100 on the 10-minute chart did certainly actually make a potential base here as well. So FTSE is making a base around the 6,400 zone. So watch out there in terms of potential support. Obviously, if you break that, then the markets obviously are looking to potentially move lower. If we do see a short squeeze and you are looking at gap fill first and foremost at 6,525, and then the next gap fill at 6,575 or 6,565 should I say, and then further resistance is seen at 6,610. Let's move on to the 60-minute chart for the FTSE to give you an insight here. Obviously lower lows, lower highs. If we do short squeeze, and watch out for this descending diagonal trend line, and again on the at the moment the 60-minute chart has pointed to bottoming tails, but again the obviously fundamental backdrop does remain bearish, and don't be surprised to see a move down to 6,320 before we start to rally again. So certainly don't discount that scenario. Nevertheless, if you do short squeeze and you are looking at a potential move at 6,570 and 6,610, and eventually obviously the diagonal descending trend line, so watch out for that in terms of the move lower, or should we say move higher. If it's a short squeeze, move lower, then obviously you're looking at 6,325. Now let's cross-reference this with the German DAX. Again, German DAX is an important chart. It's been quite bearish, as you can see here. We've closed a gap here around the 13,430 zone. You are looking at the next potential gap fill at 13,240, so watch out there. In terms of this key, obviously gap fill certainly has held. Very, very impressive there. Okay, so watch out in terms of the German DAX. Now we are coming into potential support territory. This was the this was the previous breakout zone as well, so just bear that in mind. This was the key breakout zone, or the key thrust higher from the previous resistance zone. So previous resistance equals support as well, and gap fill support. So certainly a strong argument for a potential rally in the European equities, but nevertheless, bearing in mind, given the overall bearish obviously backdrop, don't be surprised to see the gap fill below close at 13,240. Potential support here at 13,000, and obviously if we do really get bearish, there's three further gaps below as well. So certainly keep that in mind in terms of the German DAX. In terms of the French CAC, let's have a look here. Now again, there has been talk with regards to France going back into lockdown, so that certainly has been overtly negative. The daily chart, very impressive sell-off, and as you can see here, we've closed the gap. So French CAC remains into gap fill support. Okay, given the fact that we did get a bullish engulfing candle the day before, and then obviously following day we got a move lower, the bulls certainly seem to be in control, provided we hold this gap fill, or so we see the bottoming tail here. If the market obviously does continue to roll over, given the concerns regarding the vaccine supply and given the GameStop saga that's going on at present, and obviously a total lack of confidence in US equities and equities in general, then you are looking at a potential meltdown in the French CAC as well. So either scenario, either way, the market can certainly trade. I'm no individual with the ability to obviously forecast these markets going forward. It's impossible, but again, we just react, and that's exactly what day traders do with our stop losses in, and be nimble and be ready to adjust and change your perspective and view. European equities, or Euro Stoxx should I say now, we did attempt to rally, again feeble attempt, and obviously as you can see here, European equities, Euro Stoxx certainly flush lower. You do have an unfilled gap left now above at 3,560. resistance at 3566 in terms of the Euro Stoxx. The double bottom support is at 3475. The 60-minute chart on the Euro Stoxx, again, we've closed the gap here, so let's just have a look. That gap fill is closed. Next potential gap fill at 3450, and then obviously support at 3411 on the downside. Daily chart, the Euro Stoxx certainly isn't looking very healthy, let's put it that way, okay? Very, very weak, let's put it that way. Certainly very, very weak. And it was a bearish engulfing candle as well. I'll finish on Friday, so that certainly doesn't look very healthy at present. Okay, European equities certainly exceptionally weak. Okay, so I think that really sums it up in terms of the markets then going into tomorrow. Going back onto our primary, obviously, focus, which is the FTSE, you are into potential short squeeze territory. It's kind of ironic and funny as well that we're talking about short squeezes here given last week's saga. So again, looking at potential short squeeze, given the fact that we've fallen obviously 500 points now, one would be extremely cautious in terms of any potential further short positions. But then again, you have the ability to obviously move in and out 30 to 50, 60 point moves in the FTSE. If we do obviously see a drop to 6,300. 6,300 would be an area that I would be extremely cautious, and if anything I would be on the long side looking for a potential powerful short squeeze. Again, the focus will be US equities, so as we go into US equities, you are going to see a lot of weakness unless obviously we get some bullish news in terms of vaccines, or bullish news in terms of obviously the US stimulus story as well, so watch out there. But if you continue to see the outbreak in terms of individuals being denied the ability to trade, okay, trading accounts suspended, obviously liquidity concerns, etc., then obviously that reduces the faith and trust in US equities or the US stock market in general, and that has ramifications globally. But having said that, bearing in mind if obviously loss of trust in US, that potential money could be shifted into Europe and the UK, and therefore could favour European and UK equities as well. So again, that certainly is a potential bullish argument for European and UK equities. Nevertheless, we trade what we see and we react accordingly. Wish you the best for the trading week ahead. Be sure to visit obviously my site and follow me on Twitter as well. Goodbye now.